Good morning. It's Monday, the 24th of April. I'm Steve O'Hare with Signal Centre and Talking Bull. You're joining me at the start of the new week, and we've got a lot to get through, a lot of news to get through, and then we'll dive into the technicals. Please feel free to post a little note in the comments on the different streams, and I'll be able to dive in and take a look for you, give you my opinion on the market from a technical perspective. Also, maybe throw a little bit of what I think is going on in the market from a fundamental or macro perspective as well. So let's dive into it straight away and jump in with the latest headlines. Eurozone manufacturing index dipped further to a 35-month low, so almost a 3-year low of 45.5 from 47.3 previously. The services sector index strengthened to a 12-month high, and that was above market expectations. Although output prices increased at a strong rate for the month, it was the slowest rate of increase for 15 months. The flash UK reading for PMI business confidence data recorded a further manufacturing decline to a 3-month low in the UK of 46.6 from April's 47.9 previously, and below expectations of 48.4. The composite outlook index also posted a 12-month high. Costs increased at the slowest rate since March 2021, but there's still a sharp increase in output prices, with only a slight slowdown from record highs posted in April 2022, so a year ago. US manufacturing PMI index strengthened to a 6-month high of 50.4 for April. New orders increased at the fastest rate for 11 months, but export orders continue to decline. Fed Governor Cook stated that wages growth and hiring had slowed down. She added that the Fed is trying to figure out when the central bank needs to stop with rate hikes. The overall rhetoric was relatively dovish. However, Bank of England's Ramsden stays hawkish over the weekend. He stated that high inflation is a bigger risk than over tightening, and that he is focused on staying the course on tightening. Markets continue to expect the Bank of England will raise rates in May. There were reports over the weekend that the Bank of Japan would consider a long-term review of the impact of its easing policies. At this stage, markets expect no change in the monetary policy at the Friday's meeting. Comments from Bank Governor Ueda were generally dovish on Monday. And the latest German IFO index is due for release today. Consensus forecasts offer a marginal increase from the March reading. So that's about it. That's wrapping up the news that we have so far. Morning, everyone. We'll have a look at rice. We're going to take a look at Brent for you. Mosh, looking at dollar CAD as well. We'll put that in there. And anyone else who wants to sort of like throw a few things at me, just let me know and I'll cover them off. We're going to start with the cryptocurrencies like we normally do. Let me just dive in and get this chart shared for you so that we can have a look, because Bitcoin is a little bit under pressure. So share screen. Here we go. So here we go. Bitcoin, looking at the weekly chart. We talked about this on Friday. Obviously, Saturday and Sunday, Bitcoin trades, and we were looking at the potential for a negative price action to engulf the previous week's spike higher. So we managed to get up the week before 31,000. That seemed like a little bit of a step too far, and price action has given up all of those gains, and in fact we're trading at below where we closed on the week of the 13th of March, trading at 27,500. I'm going to dive down into the shorter term timeframes and take a look at levels to watch around here. From a daily perspective, we have rejected this move through this resistance area. Obviously, the resistance area was quite wide. It was from anywhere between 28,800 up to 32,500, stalling somewhere just above the middle of that, and then reversing sharply lower. We are below that 28,800. For me, that's quite a pivotal level. That was the spike low from on a few occasions, specifically got down to 28,600 on the 21st of June 21, but 28,800 for me was a multiple touch points on a low basis. So that became support. Once we broke through that support, we haven't managed to get up through it until quite recently. And after a couple of indecisive weeks, we managed to punch through it the week before last, but that's given up those gains. So really under pressure from that perspective. We did have this inverse head and shoulders formation that we were talking about. The neckline for that comes in at 25,400, quite an important area, and the measured move target for that formation was at 35,000. However, it doesn't look great so far. Are we looking to retest that 25,400 before projecting higher to the measured move target? That does happen quite a lot in these inverse head and shoulders formations or normal head and shoulders formations. Quickly run on to the levels to watch in Ethereum. Again, on the short-term charts, we're under the cloud, we're in bearish territory, and we've rejected the move. 2,140 was the highest we got, around there, and we're back down, and we're focusing again. The real support level for me, or the pivotal level to watch, is 1730. That again is one of these levels that has been multiple touch points, multiple resistance support levels, and we're trading currently around 1845, just above the support at 1826, and that again to me looks like a bit of a topping formation. So I'd be a little bit careful if we did manage to break down below that 1826 level. Could open up a little bit of a further downside. And also below there, obviously we've got the 1730 and also 1688, which was the swing low from the 27th of March. So under pressure. XRP, similar type of price action. We've posted the high on the 29th of March up at 58.5. The swing high we got from the 14th of April was 54.70. And since then, we've given up gains. We've last Wednesday was really the bearish outside candle, which put an end to this. We've now got a little bit of resistance coming in at 48.40, we call it. That was the swing low on the 3rd of April. And we swung high to there today, but have rejected quite quickly. Trading at 46.5. Support now, really looking at 44, and then below that 41 before the major support level coming in at 35.5. That's XRP. Let's take a look at commodities, and as I say, right, we're going to take a look quite a close look at Brent crude oil, but I'll quickly go through what we see in gold. On the daily chart, we're looking at breaking down. We've got this reverse trend line coming in today. That comes in at 1966. Now, we've talked about that level before when we were building our way up to these heady heights, and that will be a little bit of a support level today. That's where the reverse trend line comes in. Currently trading around about 1980. Under pressure. Friday's price action was engulfing, bearish engulfing, and we're below the 9-day moving average, and we've got a nice crossover on the momentum side of things on the daily chart. So looking a tad bearish on gold at the moment. Obviously, we'll have our BDI on dollar. That's still holding up around about that 102 level on dollar index, 101.87 trading. So it's still fighting for its life there. And if that starts to rally, obviously that will have a negative impact on gold prices overall. We'll take a look at crude oil. We're breaking back down and filling that gap from the week of the 31st of March to the start of April. We had that big old uplift after OPEC plus nations over that weekend told us that they were going to cut production, and we've finally broken down through the low of that Monday, and it's rejected. We've continued to move lower, and although we got a little bit of a pullback on Friday, price action again pushing towards those lows, trying to fill that gap fully. Let's take a look at the Brent crude oil in more detail. Again, we've still got a bit of a gap on the chart from that weekend of the 31st of March, and where the high there was at 79.88, and we've been down to 80.26. So only another 50 cents to go before we fill that gap. And price action, as I say, Friday similar, was positive price action on Friday, and we've given up those gains and under pressure as we're moving into the early session on Monday. So lots of momentum to the downside. As you can see from the 4-hour charts, we're below the cloud. We've formed quite a nice little topping formation here, Really resistance coming in around about that 83.44 level. In front of that, we've got moderate resistance at 81.83 as well, but looking to sort of like break and fill that gap higher. Fill that gap lower, sorry. And support below, I would say, would come in the form of potentially $79 down to 78. Well, actually down to 77. So between 77 and $79, we'll have decent support there. And it feels like this is a real test of that bullish momentum actually giving up at the moment. So overall, I'm quite negative on crude oil, and it feels like we're going to slip back into this overall long-term downtrend. So be aware of that. Natural gas, it's mixed above. Currently, we're looking at this double bottom formation, or potentially a triple bottom formation on the 4-hour chart. But on the daily chart, will be a double bottom. We've retested the neckline, and it's staying positive at the moment. So maybe a little bit more upside on natural gas. Let's take a look at FX now. Dollar index, we'll take a look at that to start with, and take a look at where we are on the weekly chart. Let's remind ourselves we have potential for a major bottom in place, but we really have to do a lot of work. We have to get up above that 105.89 level, which would be the neckline for a double bottom formation. Price action so far looks pretty positive since we had the swing low on the week of the 10th of April. That's when we got down to that 178 level, and yeah, still looks pretty positive from that perspective. Take a look at the daily chart. We can see that price action over the last week has really gone sideways. So we are sort of like, we had this bullish outside candle on the 14th of April. And since then, we have remained in positive territory on a short-term basis, but really need to push on now. 102.24 would be resistance on the upside. If we manage to break above there, then it does open up a little bit more room to the upside. From a support perspective, obviously the 180 area is the level to watch. If break above below there, and we are back under pressure on the dollar index. Looking at euro dollar, we seem to be obviously with we seem to be sort of like topping out a little bit with that dollar strength. Almost a bearish outside candle, not quite on the that 14th of April when we got that reversal in dollar, and really resistance coming in at just above current levels. Really 110, we'll call it 110 even, that psychological level, and the main resistance above there 110.76, which is a swing high from that 14th of April. Down below 109.10 is the support level, and plenty of room below there to open up before we hit some long-term moving average levels. And cable, looking to form a double top formation, the neckline down at 123.44. Momentum seemed to stall last week as we tried to push higher, and that 9-day moving average capping those gains, looking a little bit negative as we go into the Monday session. So yeah, that could be something to line up for the gun to head trade idea. Let's take a look at dollar CAD. From a daily perspective, this isn't looking too bad at all. Let's take a look at the weekly first. The weekly candle, bullish engulfing candle last week, so that's pretty positive. We're still holding around the highs of last week, and which was also obviously the highs of the week before as well. So pushing back into positive territory. Got a nice little upward supporting trend line coming in down below, down here. So from a longer term perspective, this looks like quite a nice bottoming formation. On the daily chart, we're in a bit of a channel. 132.26 would be the horizontal support. There'll be another one just above there. Let's pop that in there. That's a bit of a better one, 132.62. And obviously the swing low from a couple of weeks ago, 133. So this is like forming a nice little base here. We've broken up through this resistance at 135.53, which we had just trading above there now, and we got some nice moving average confluence levels around here. So if we manage to get above here and close above here on a daily basis, it really does open up that upside. So that would look pretty decent indeed. Let's take a look at. I hope that's okay for you. If you need more information, give me a shout. That's about it for the forex. Let's dive into indices and then jump into the gun to head. Looking at indices now on a daily basis, looks like we're topping out a little bit, but you never know with these indices. It always seems to be someone comes to the rescue. Overall momentum sliding downwards on the FTSE as we are maintaining these sort of like price levels from a daily perspective. 79.35, the resistance, 78.73. So a nice tight range and looking for a break either way. The overall Friday's price action, it was pretty positive in the DAX. We're still up at these heady heights. 15,920 is resistance level, just about 70 points higher than this. So the indices really at the start of this week looking to really work out whether they can try and kick on to those serious resistance levels, or have we given up that possibility at the moment. Dow under pressure, taking out Thursday's low at the moment as we speak. So opening up to the downside. We have got a nice little bit of support, maybe all the way down around 33,400. That would be that. Actually, I'll move it up from there. It's probably a bit higher than that. Yeah, looking at 33,500. That would be the level to sort of like really consider whether we have topped out here or not. From a daily perspective, you wouldn't really sort of see it because you've got this little candle. It's quite close together, but the 4-hour chart will show it better. Potential for a double top formation. The high here, the neckline breaking. I mean, for me, that's like quite clear. And we're breaking down below these little supportive levels here. We're down below the Ichimoku cloud. So potential for decent downside on the Dow if this momentum continues, and could accelerate quite quickly. Similar sort of price action, double top formation. The neckline's a bit further down, haven't quite got there yet. So only a potential double top, whereas the Dow has placed that in there. 12,830 is the level to approach or to attack on the Nasdaq on the downside. S&Ps looks to have formed a little bit of a head and shoulders formation, but yeah, same sort of thing. We've got this neckline around about current price action, so 4,115. Breaking down below there, and below the 4-hour Ichimoku cloud is pretty negative to the downside. So again, indices on the back foot this morning, but obviously, you know, as soon as the US wake up, they sort of like seem to shake off these worries and woes. So let's see if that can follow through into the afternoon session. So let's go to our gun to head trade idea. This is the part of the show where we take a look. Usually me and Joe's not here. We'll take a look. We'll pick a trade. We'll have a stop and target on the trade. We have to enter at market, have a stop and target, and we have to have at least a 2-to-1 risk reward ratio. Sounds easy, but it's not. And we prove that by showing you what we do. Our win rate on these are around about 40%. But because we have a risk reward ratio of 2-to-1, over time we expect that to result in a positive performance if we do well. We only risk 1% of capital per trade. Quite a key thing to think about money management and trading. This isn't a get rich quick scheme. There is no get rich quick scheme out there unless you want to risk everything, and that's not a good idea. As we all know, we've all tried it. We've all failed at risking everything. So don't risk everything. 1% risk is just a nice amount to risk, and it keeps you in the game for a lot longer than if you're risking everything. So think about it. Let's take a look at where we got to on the gun to head. I'm trying to see what we did. Where's the trade ideas from Friday? Did we post them up? Doesn't look like either me or Joe posted them on Friday. Thought we did. We posted the Nasdaq and EU50. We're going short of those on Thursday, but Friday's price action we didn't get in. So let's take a look from here. Obviously, it doesn't look like we did very well. Let's make this bigger. So Joe was buying WTI. No, I was buying WTI crude oil. That turned around, and I got stopped out on that, so that was annoying. And selling dollar yen. Joe was selling dollar yen, which didn't work out. Dollar remained strong. So that's the results from Friday. We started off with a balance of £2,000. It's now down to 1917, so just short of 1% down since the start of the year, which isn't great, but it isn't the end of the world. You know, we can sort of turn this around quite quickly and get back on the road. Let me just think about that. How much are we down? We're down more than 1%, mate. You're down about 4%, just over 4% since the start of the year. But we can turn that around quickly, so we're not going to give up. So I've got S&P on the chart here. So for me, this is something I'd like to sell. However, I do feel like I've got to give it a little bit of room because of the US coming in this afternoon. So let's go on to get on to the Oanda screen and get the S&P price as they're looking at it. And let's just set it up just to show you exactly what I'll be looking at. We're trading around 41.16. I want to keep the stop quite tight, and the target will be a bit like that. So that's the sort of trade idea that I'd be looking for on an intraday basis. Oh, we're on, let's get it on an hourly chart so it makes a little bit more sense. Trade ideas will just close out when we get to 8 o'clock. That's the sort of thing we're looking at, moving down towards that. So if we can manage to break this barrier of 41.14, I'd rather wait until I saw that. So let's get this lined up properly. I'd rather wait to see that break, but we've got a gun to our head, so we can't wait. So let's trade it, create new order, sell. Let's get the 1%. Don't want to risk 3,188. Thank you very much. Stop's going to be at 41.37. And target is going to be 4,072.3. Gives us a 2.35 to 1 risk reward. So for me, that will do donkey. There we go. We're in. We are live. We're short of S&P. My stop is in the Ichibuku cloud. Ideally, I would have it higher than that, but there's a risk reward, like a risk reward that we were targeting around about that 2.35 to 1. So I'm going for it, and it's under pressure. Let's see how that plays out. I'll try and get that posted as well, and we can get some sort of idea. I didn't actually show you that, did I? This is what we're looking at. Sorry about that. Sharing screens. Thanks, Mark. Yeah, so let's go over it again. Why am I looking at that? S&P on the weekly chart rejected. This is a bit of an indecisive candle looking here. Can we get a negative and form a evening doji star formation on the weekly? Question mark. Daily chart broken down below the bullish channel. It's looking better and better the more I look at this trade idea. But we have got to break this support here at 4,114. 4-hour chart. We are breaking through that cloud on the 4-hour chart, and also on the hourly chart, we're below it and trending lower. So for me, I'm sort of thinking this could be a nice little turnaround, but it's always a bit tricky with coming in on a Monday morning and waiting for the US to open up. That's my trade idea today. Hope you can enjoy that and join in the join in with the enjoyment of that when it pays off. So that's about it. That's all we've got time for today. Finally, events for this week. We've got the German IFO in 35 minutes. We talked about that. And events for this week: US GDP Q1 advanced reading on the 27th, and on the 28th, Bank of Japan policy decision. That's the end. That would be the end of the week. So thanks for joining me today, guys. And apologies for the not sharing that screen during that gun-to-head trade idea, but hopefully you've got it all now and you can see it. So thanks again, and look forward to catching up tomorrow.